Yeah, welcome back to my channel. So today let's talk about something very important to the Nigeria's economy, which is how can small and medium scale enterprises access capital, right? Yeah, as you may probably know, the small and medium scale enterprises in Nigeria, they form about 90% of all the businesses in the country. And also interestingly, they employ about 70% of the workforce in Nigeria. So you can see how important this sector is. But then, despite the fact that, this is the sector that is driving growth in the economy, driving innovation, creating jobs, they really need capital to grow. In fact, for context, let me show you a data, and that's like the report done by IFC, which is trying to like break down the sector into, the SME into formal and informal. There's a lot of data going on there. You can see there are about 38 million informal small and medium scale enterprises in Nigeria. And they also try to like give, based on the survey, they also like said that 96% of them, they are sole proprietorship business, meaning that it's a one-man business. You could also see like go up to see the formal SMEs, medium SMEs, which is like more organized, small businesses, probably in a firm-like, framework. You could see they also tried like do a survey of how much they've raised, through commercial banks. They said they gave like a breakdown of how much they make through they raise through microfinance banks. So I mean, all of this is very interesting data, but all what it's trying to point us to is that SMEs, they form the backbone of the Nigeria's economy. But the problem is, why can they not access capital? First, let's talk about the challenges that they face when they approach the traditional banks in Nigeria. But really, so if you want to really understand the funding gap in this critical sector, the first thing you need to know is that why can they really not get money from commercial banks? Because I mean, that's why banks are created, right? To provide capital to businesses so that they can grow. But small and medium scale enterprises, they've struggled to get capital from banks. So, and I want to show you the reasons why that is the case. Look at this. I broke down these challenges into 4. The first one I want to talk about is the high interest rate. And as you may know, the interest rate in the economy is very high. And when we talk about small and medium scale enterprises, these are businesses that are not making, heavy profits. So how do you want to borrow, money, between 18% to 30%, in fact, sometimes up to 35% interest rate. So it makes borrowing extremely expensive for SMEs. So if they really borrow as high as that, you can imagine their margin is going to reduce. In fact, they cannot sustain, the business cannot really work. So another problem we've identified, reasons why they cannot really approach the bank, is also the collateral requirement. As you know, banks demand substantial collateral. In fact, you need to have like a property, you need to have like large deposit, probably a house, which most SMEs will definitely not have. In fact, most startups will not have that kind of collateral, except the founder really has like a rich, parent or rich friends that can, give them property to use as collateral. So again, this limits the fund that most of these businesses need to survive. The third one I want to talk about is limited credit, history. As we talk about small, medium, and scale enterprise, in fact, as we talk about companies that are just even starting, the problem we have also identified is that they have like limited credit history, and when banks don't see that you have, gotten loan, you've paid back, you have, enough financials to show that you can pay back your loan, it's very difficult for banks to give you money. So all of these problems, they create a kind of vicious circle of funding gap for most of the SMEs that we have seen. So let's talk about the last one before I move on to the alternative financing options that most SMEs can explore, which is like the complex bureaucracy. And this is the real thing, right? So if you want to apply to the bank for loans, you have to like do a lot of paperwork. They ask for different documents. It goes through different approvals. They look at your model, which some of the SMEs will probably not have. So really, how practical is it for small and medium scale enterprises to really access the capital they need to grow? So let's talk about the alternative financing options. And this is like the core of the discussion, which is if SMEs cannot really access capital through the traditional banks, which generally should give them money, where else should they go? So let's talk about it. Okay, this is just about the news item talking about, how, banks have, showing different interest rates from different banks as, central bank is increasing in the MPR. So let me quickly show you that before we talk about the different financing options. You can see, just for context, they look at different banks. Look at GT Bank, 24%, which is like interest rate per annum. Look at Keystone, 31%. If you go to the right top, you see First Bank, 25%. You can see Fidelity, 30%. It shows about different banks. You can check the news item. It's about in some business day, in June 2024, which is just trying to like show what is the average interest rate that all these banks charge for, as interest rate borrowing costs for different businesses. So it gives you context to why most of these small businesses cannot really survive with the high interest rates in the country as at today. Okay, yeah, let's talk about the funding alternatives. And I just want to like quickly show you, the different funding alternatives that I'm thinking about in terms of funding options. Okay, before that, we can also look at this. PwC did like a survey in 2024. They did it in, I think it's November 2024. Okay, July 2024. They were just trying to also give context to where do SMEs get their money from. You can see that about 50% in 2020 got their money from family and friends. The people that got the businesses that got from like the traditional banks, about 15%. High of 26% in 2022. You can see grants, you can see cooperative societies. So really, this is not a sustainable model to get money from, but the survey done by PwC showed that most of these SMEs don't really go to the banks to get their capital. Again, still talking about the high interest rates. So this is also a survey which, PwC did that was showing like what are the challenges that SMEs usually face when they try to access loans from the traditional bank. You can see most of them said, high interest rate is what deter them, which is like a real problem, right? Some about 26% also said because of too many procedures, and that's true. It includes like the collateral. Okay, that doesn't include the collateral. That just includes all the documentation. They want to see like business plan. They want to see like history, financials, all of that. So 26% is reason because of too many procedures. You can see collateral problems about 16%, which is like they couldn't access the bank loan because they can't give the collateral needed to assess that. All of that is, they're good stuff. It's the survey done by PwC in July 2024. Okay, so let's talk about the solution, right? So if these problems exist, so the question is, what are the, next best alternatives for SMEs to access funds? And try to break it down into 4, which very feasible for. First is microfinance banks. And if the reason why businesses, small and medium scale businesses should have to advance toward microfinance banks is microfinance banks tend to lax. They tend to have a kind of lax, approval process or criteria in terms of, collateral that they ask from businesses. Many microfinance banks, in fact, Lapo, Asion, the new ones that are coming up, they just try to make sure that they give few requirements that the traditional banks will probably not pass on because of different approval levels. So this is a very viable option which SMEs can, can explore. The second one is the fintech platforms, and this is also very viable. I think I have experience with Piggyvest too. So if you look at platform like Piggyvest, Carbon, Flutterwaves, SME solutions, so they give like a very fast, collateral-free loans, and what they're trying to just do is also like push capital out. So this platform, they leverage technology because they kind of can make informed guess, based on data they have. Look at it's kind of historical transactions. So it's an alternative to like the traditional banks in order to access capital. The third one, which is like the venture capital and angel investor. And this is supposed to be like the first step towards getting capital, right, for small businesses, but we know the problem why that's not the case. Many venture capitalists also want to like see signs that the business is viable. They want to see signs that there's a kind of structure around the business, it's scalable, and all of that, nice stuff. But then, as we know, the Nigerian, venture capital ecosystem is still growing. So startups in tech, agribusiness is actually increasing. They are getting a lot of funding. So I'm just saying that is an alternative. But then any, SME that have to like explore that must show that the business is viable, scalable, and there's a kind of serious signs of growth. So that's another alternative that I'm trying to propose here. The last one, which is like, the fourth one, is the crowdfunding. And this is novel, right? This is a new thing happening right now. So if you look at platform like Kia or Lydia, so these are like a peer-to-peer lending platform. So what do? They just allow SMEs to raise funds directly from the public or private, lenders. So it's like a connector, between people that are really, businesses or individuals that are willing to lend to SMEs and SMEs that want to like access capital. So it's a viable option, if you really do not think you qualified for the big commercial bank loan. So yeah, let's go back to that PwC survey. As I mentioned, you can see family and friends, they represent about 50% of the capital that most of the SMEs tend to get. But the issue is that has to be reversed, right? So how do you reverse that? So let's talk about the last option, which is like the government, fund the government option before we talk about the steps that SMEs have to like take. So it is like government initiatives. I know many people don't like to hear about government initiatives, but they tend to work if you can do the work, right? The first one is the CBN intervention funds, and you may not believe it, but CBN, they've deployed almost 220 billion to small and medium scale enterprises development, so which kind of offer single digits. So as you go to commercial banks and you're trying to like access loans at 25-30% rate, these intervention funds can give you a loan as low as 10%. I know it's very hard to meet some of the criteria because you have to like do a lot of paperwork, but then the government initiative is also a very good way to access funds. The second one here is the BOI. I've particularly explored BOI loan for company I've worked with before, which means that it works. So, but then BOI, they finance like machinery, they finance like infrastructure that you need for your business. But then if you can do the working, if you can show signs that you're buying the machinery or the equipment directly from the manufacturer or the vendor and the business is viable, BOI is also a funding option that most SMEs can, explore. The third one, which is like the bank, the development bank, is also a good option. Again, Development Bank of Nigeria is, it's kind of wholesale banking to microfinance banks and cooperatives. but you can use them to also get funding for your business. The last one, which is similar, which is like the National Youth Investment Fund, I think that was kind of trying to empower youth entrepreneurs in 3 million in loans. So, and the initiative is kind of designed to, reduce youth unemployment. So again, I'm just trying to say that the government initiatives, apart from the 4 alternative I mentioned earlier, they are viable option. I just want to show you this. Like you can see, there are a lot of news items that show that the money is there. You just need to tap into it. Why businesses, individuals can't access 1.75 trillion intervention funds. So, I mean, this news item is trying to just give, background to why the money is there, but it's not being accessed. So just saying money is there. If you can access it, it's available. News item again, talking about Bank of Industry. This is just a state, about 3 billion, was earmarked for SMEs in Katsina. Again, what I'm trying to buttress here is that there is money in some of these governments in intervention fund. You just need to explore them. So finally, let's talk about the steps. And this is, I'm going to close with this. So the practical steps that I want to talk about 8 of them, which I want to highlight, is if you really want to get funding as a small business, these are very critical things that you need to do. I mean, it's as easy as you need to register your business properly. Why is that the case? Because if your business is not legally, registered, then it's not credible. You won't qualify even for government. Even for private sector funding opportunities, you won't qualify. And again, it's as simple as making sure that your business go through CAC, you get the right business name. If you want to start a company in future, probably go through limited liability company registration. Again, tax, which is a bonus tip for that business registration. You need to make sure that you're tax compliance, because most of these funding grants, they tend to look at how you've been tax compliant in the past. So it's just a long-term game. You need to make sure that you are building a case for future funding. The second one, which is a practical step, is creating a robust financial management system. It's deliberate. As the business is ramping up in terms of revenue, you need to start thinking about how do you track income. You need to be able to track expenses. You need to be able to track profit. You need to make your business attractive to lenders. And how do you do that? You need to track what you're doing. And how? You need to, use accounting tools. There are some of them that are very easy and cheap to use, like QuickBooks. Just try to maintain basic financial records so that you're ensuring transparency that, okay, this is the money I spent personally, this is the business, money. Because if people want to give you money, if anybody wants to lend you money, they want to make sure that you're using it for the right purpose, just like the business purpose. The third one, which is building a solid business plan. And, I've mentioned these in one of my videos. It's a business plan is the roadmap. It shows the vision, shows the mission of business. It shows the profitability potential of the business. It shows how you're going to the markets. It shows market analysis. It shows the funding requirements. So the business plan is going to help you to try to know exactly how much do you need, where do you need to deploy the money to, and that helps lenders, to know exactly why they should give you money. The fourth one is the organizing financial records. Like I mentioned, if you have a robust financial management system, it will be very easy for you to organize your financial records, because that is the only way that shows that the business is disciplined and the business is profitable. And in one of my videos, I try to explain basic income statement, balance sheet, and cash flow. As a business owner, even if you're not an accountant, you need to be able to understand what is the balance sheet of your company, of the business, what is the income statement, what is the cash flow. So all of this is just trying to like show business performance, show the assets you have, show how you spend the money. And that is about that. Let me talk about the fifth one, which is like the networking. You have to build relationships. And why do you need to do that? Strong connections. You want to talk to industry leaders. You want to, have network of investors. You want to have a mentor, in the industry. I mean, you just want to have like people that can introduce you, people that can open the doors for you. And how do you do that? You can join, Lagos Chamber of Commerce, an industry, right? So you can attend, events, which is, I think Tony Olumelu has a foundation that hosts all of this. So what you're trying to do is just trying to like build connections and network of people that can eventually give you the money or introduce you to people that can give you the money. The next one, which is like the improve your creditworthiness, which is, again, linked to what I've said before, meaning that if you have borrowed small money in the past, you need to show that you have repaid it. You need to show, you're just trying to show signs that you're creditworthy, meaning that you have been accountable with small money, and then people can trust you with bigger, capital. This is very linked to, venture capital funding, which is focused on scalability. So what are we trying to say here? We're saying that businesses with potential growth are more attractive to investors and lenders. And how do you show scalability? You need to highlight the fund, what you want to use the fund to do. You need to show how operations are scaling. You need to show the market you're trying to reach. You need to show how profits are going to improve in future. But the last one is just one of the cheap ways to get money. Apply for grants. So why do you need to do that? Grant is free money, right? You don't need to pay. It reduces the financial pressure. So many people have gone to like the Tony Olumelu Foundation, Bank of Industry grants. Some have even accessed like foreign, grants like USAID. So we are just trying to say here is that if you explore all of these practical steps, then it will be very easy for you to, again, fight all of the battle of, the problems of the economy in terms of trying to get money. So that is what I want to talk about today in this video. Again, in summary, I've said a lot, but I have tried to tell you that SMEs, which is like a small and medium scale enterprise, it can be sole proprietorship business, they really form the backbone of the economy, meaning that there are a lot of them, about 90% of businesses, they are in that category. Again, they employ a lot of people. They employ almost 70% of the workforce. Why are they not getting funding? We have highlighted the reasons why they can't get money from the banks. But again, I've also proposed some of the ways that they can get money, which is like the alternative financing. I mentioned something around government. Again, the last one I mentioned about is the critical, steps that they need to, follow, which is like the practical step. I think I mentioned 8 of them. Is all you need really to get your business going, because capital is not cheap and it's also not easy. Thanks for watching. I will see you again in my next video. If you find the video helpful, like, subscribe, share, comment. Let me know what you think about the video. You can also let me know what you want me to talk about later on in my next videos. Take care of yourself. Bye.